Hello traders and welcome to another video review. Today is Friday, September 5th, 2025. Let's take a look what do we have in the economic calendar for today. Japan issued the data related to the household spending. As you can see, both different measurements on the yearly and on the quarterly measurements. Yearly meets the expectations 1.7. And the quarterly is down. I mean, it's up than the previous number, but the forecast is 2.2 and the actual is 1.4 only. Halifax house price index from the UK is scheduled for release at 8 o'clock. At the same time, we got the German factory orders and core retail sales and retail sales data from the UK. SICO consumer climate is scheduled for release at 9 o'clock. This is this data from Switzerland. And the Eurozone will issue the GDP at 11 o'clock. Mortgage rate from the UK is scheduled for release at 11 o'clock as well. And that's about the London session. We enter the New York session. Average hourly earnings and non-farm payrolls data are scheduled for release at 2:30 as usual. Together with the non-farm payrolls, we got the unemployment rate, participation rate, and private non-farm payrolls. Data from the Canada are scheduled for release at 2:30 as well. Employment change, unemployment rate, and IV PMI. At the end of the day, we got the US Barker Hughes oil recount and total recount scheduled for release at 7 o'clock, and that's about it. So the major event of today, non-farm payrolls data together with the average hourly earnings and unemployment rate will be released during the US session at 2:30, and this is the major event of the day. So please don't be surprised that the market is positioning itself ahead of this event. But let's take a look at the charts to confirm our assumptions, and we start with euro dollar. So the euro dollar for our time frame chart is positioning itself ahead of the non-farm payrolls data, a little bit away from the lower channel line. Very limited volatility, roughly around the level of the 1.1662, which is the 100 periods moving average. Momentum 53 points, so barely positive, and as you can see, we are still trading inside of the trading range located between 1.1745 1.1575. So we are waiting for a breakout out of this range. Maybe, just maybe, the non-farm payrolls data scheduled for release later on today will be the trigger that will cause the major movement on the euro dollar. Please remember, the major movement might be in favor of the euro if the non-farm payrolls will be better than expected, or that means euro will most likely go higher, even towards 1.1744 to test this technical resistance. But if the non-farm payrolls data will be worse than expected, we might see movement to the downside out of the channel towards 1.1575 technical support. It all depends on the on the data release and on the reaction for the data release. I just noticed that the range on the euro dollar is even tighter these days, because we got the internal technical resistance located at 1.1683 and let's say technical support roughly around 1.1665. So this is like a 25 pips difference. So that makes the range even a little bit more limited as we wait for the non-farm payrolls data. The other market susceptible for the non-farm payrolls is obviously the SP 500. And as you can see, the situation on the S&P 500 is quite different than on the euro dollar. We got very strong bounce from the lows of 6,357 points. We just made another all-time high above 6,508. The actual level is 6,514. Not that much, but there is still room to the upside here and room to the upside on the RSI. So very clever situation on the SP 500. 4-hour time frame chart is showing us the uptrend. Daily time frame chart is definitely showing us the uptrend. We are trading far away from the last technical resistance. Now it's obviously support 6,203 points. Momentum, as you can see, is steady, and it is positive, and it's still strong. Right now on a daily time frame chart is roughly 62 points. So the outlook remains bullish on the S&P 500, as well as the market position is positioning itself ahead of the non-farm payrolls data release. We are above the orange trend line support. We are above the 100 periods moving average. We can change the colors of this two levels for green, so that means those are the technical supports right now, 6,485. And obviously if we ever get there in this today, for example, there is another technical support at 6,416. Gold will be susceptible for the non-farm payrolls data. Yesterday we got the new all-time high located at 3,577. Then we have some kind of a pullback from the extremely overbought conditions, and the market is now trying to resume the uptrend before the ahead of the NFP payrolls data release. So it's very close to the yesterday's swing high, and if there is if the data was than expected, so maybe some kind of a flight for safety scenario will be triggered, and that means the gold will move higher on this chart. Technical support 3,500 and 3,451. Those are the technical support levels. This is a 4-hour time frame chart. Let's take a look at the daily. On a daily, it looks even more impressive after this big rally towards the extremely overbought conditions. Please notice that every time we run into extremely overbought conditions, sooner or later we got some sort of the downside movement. Even here we got the downside movement. After the new swing high, we got the downside movement out of the extremely overbought conditions. Then we got the range trading, and now we are back above the level of the 70. So if the history repeats, we should see some sort of the profit taking, some sort of the pullback on the gold quite soon. The other market that is susceptible for the non-farm payrolls is of course the US dollar versus the Japanese yen. However, this market is very steady these days. All of the August we've been trading basically, except the downside movement towards 146.63. We've been moving inside of this very limited range. As you can see, just a few days ago we've made another attempt to rally, local high 149.15. However, it didn't actually work, and the market is being limited and capped by this movement to the upside, which is straight to the supply zone. So it took almost a month for this market, over a month, because that's the August 1st, and today is September 5th. So it took over a month for this market to establish this nice sideways trend. Textbook example of a sideways trend. For today, the situation is very simple. If the dollar will appreciate across the board, the US dollar versus the Japanese yen should break higher, and the first target is 150.92. And last but not least, let's take a look at the Bitcoin. The Bitcoin is trying to move back up again right now, testing 100 periods moving average on a 4-hour time frame chart, roughly around 111,617. Nevertheless, we are just below the technical resistance. Now we can even move this technical resistance to the yesterday swing high. So this is 112,630, and this situation is telling us that the bulls are trying to move higher, but so far they didn't actually made any point, and they didn't make any progress these days, because every time they bounce, the market the bears are coming into the market, and they are limiting the movement to the upside. As you can see, all of these corrections to the upside are almost similar, very similar. So we need a decisive breakout either to the upside, either to the downside, to get out of this pullback range, let's say. In case that there is a better than expected data from the NFP payrolls, the Bitcoin should move higher. In the other scenario, obviously this could help a bearish case to bring the Bitcoin a little bit lower, back down towards 1,000 and 7,456 lows made on the September 1st. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.